Hey everyone, welcome back to Corporate Decoder, where we get to the bottom of the corporate world, and today we are diving into some interesting news from T3 Defense Incorporated. It looks like they've been busy making moves, and we are here to decode what it all means for you. So T3 Defense Incorporated filed a report on the 17th of February 2026, and it's all about a significant acquisition. They have officially bought a majority stake in a company called its Industrial Technologic Solutions Limited, which we'll call it for short. This isn't a small deal either. T3 Defense now owns 51% of it. They also have a 3-year option to buy the remaining 49%. That means they could end up owning the whole company. Let's talk about it. This company is based in Israel, and they specialize in designing, building, and manufacturing electromechanical machines and these sophisticated assembly lines. Think of them as the behind-the-scenes engineers for complex factories. Their subsidiary, Positech Limited, is also a big player, making high-performance motion control systems for both military and civilian use. Basically, ITS and Positech are one-stop shops for custom-made prototypes and systems for companies that need very specific engineering solutions in mechanics, electronics, and software. This acquisition looks like T3 Defense is expanding its capabilities into some pretty advanced manufacturing and technology. The deal itself was set up through an agreement from the 8th of June 2025. Now here is a little financial detail that's quite common in these types of acquisitions. Before this deal, T3 Defense had already lent a substantial amount of money, about 10 million Israeli shekels, which is around 3.2 million US dollars. What's interesting is how and when that loan gets repaid. It's not due until after the 1st of January 2027, and only if it meets some tough financial conditions. First, their assets need to be at least 150% higher than their debts for 6 months straight. And second, the total bank credit for its and Positech must be less than 3 months of their income, for also 6 months. These are strict requirements, suggesting that T3 Defense wanted to make sure it was in a very strong financial position before fully committing. The way this acquisition was structured is through a subsidiary. T3 Defense has a company called Star 26 Limited that's indirectly owned by T3 Defense. This Star 26 Limited is what received the 51% stake in exchange for providing the loan. So T3 Defense itself did not have to put up any additional cash for that 51% stake. That's a smart financial move, using existing lending as a way to acquire control. Now about that remaining 49% that T3 Defense can buy. They have a 3-year window to exercise this option. The price is set and it increases each year. If they buy it in the first year, it is 25 million Israeli shekels. In the second year, it jumps to 30 million shekels. And in the third year, it's 35 million shekels. This tiered pricing encourages T3 Defense to make a decision sooner rather than later, and it also reflects a potential increase in its value over time. To announce this news to the public, T3 Defense issued a press release on the 17th of February 2026. This press release is part of the report as an exhibit, which is how companies inform the market about significant events. It's important to note that information furnished this way is generally meant to inform the public, not necessarily to be considered part of legally binding filings for things like stock sales, unless specifically stated. Now, like most company reports, this one contains what are called forward-looking statements. These are statements about what the company expects to happen in the future, like potential growth or new projects. The company is basically saying, this is what we hope for, but things could change. They are trying to be transparent that actual results might be different because of various risks and uncertainties that are common in business. They advise investors to read their other SEC filings for a deeper look at these potential risks. This report also mentions that T3 Defense will be filing more detailed financial statements for the acquired business. They have about 71 days after the main filing date to submit these. This is pretty standard because it takes time to gather and verify all the financial data of a newly acquired company. So we can expect more specific financial numbers to come out in an amendment to this report. And finally, they've included a cover page interactive data file, which is basically a digital file embedded within the report itself. This is used for easier data processing and analysis by automated systems. Now let's look beyond the immediate news of this acquisition. What does this all mean for T3 Defense Incorporated? First, this move with its specialized engineering and manufacturing capabilities seems to be a strategic play to broaden T3 Defense's offerings, particularly in advanced technology and defense, related sectors, by acquiring a majority stake and securing an option for the rest. They are signaling a strong commitment to integrating it into their operations. The deal structure, using an existing loan and a subsidiary, is financially prudent and likely aimed at maximizing capital efficiency. The increasing purchase price for the remaining stake incentivizes T3 Defense to act decisively, suggesting they see significant future value in it. However, there are always risks. Acquiring a company, especially one in a different country like Israel, comes with integration challenges, cultural differences, and regulatory hurdles. The strict conditions for the loan repayment also highlight that despite its capabilities, may have faced some financial pressures, and T3 Defense is banking on its ability to turn things around or grow it significantly. The fact that they are deferring the filing of detailed financial statements for it also means we don't have the full financial picture of the acquired entity just yet. This lack of immediate transparency on ETS financials is a point of caution for investors who want to see the detailed impact on T3 Defense's balance sheet. Looking at the bigger picture, T3 Defense is investing in specialized technical capabilities. If they can successfully integrate its and leverage its expertise, it could lead to significant growth opportunities, especially in specialized defense markets, where high-performance custom-built solutions are in demand. The option to acquire the remaining 49% also gives them flexibility to decide on full integration based on how well it performs and integrates. In conclusion, T3 Defense's acquisition of a majority stake in it is a significant step, indicating a clear strategy to enhance its technological and manufacturing prowess. While the financial prudence in the deal structure is commendable, investors will be closely watching for the upcoming detailed financials of it and how smoothly the integration process unfolds. The success of this acquisition will largely depend on T3 Defense's ability to manage the complexities of international integration and to unlock the full potential of ETS specialized operations. What are your thoughts on this acquisition? Do you think T3 Defense is making a smart move? Let us know in the comments below. If you found this deep dive insightful, please hit that like button. And subscribe to Corporate Decoder for more such analyses. We also have a fantastic Discord community linked in the description. Thanks for watching, and we'll see you in the next decode.